In this learning objective, we examine a third different approach to value investing, which is activist value investing. Activist value investing involves closing what is known as the value gap. So activist value investing differs from other approaches to value in that it is not necessarily about finding firms that are currently underpriced relative to their fundamental value. It's about identifying firms whose fundamental value is substantially less than what its fundamental value could be if the firm was operated more effectively and efficiently. So what an activist investor will do is to come in and engage in some sort of takeover of the business, and often it will be a hostile takeover, where they'll take a controlling interest in the firm and then use that controlling interest to push through significant changes to incorporate best practices so that the firm can become more effective and efficient, to increase its fundamental value, therefore also increase its market price, and then the activist investor will sell that firm off at the higher price that's been achieved due to the improvements that have been made to the firm. So basically, activist investing is about engaging in takeovers of poorly managed firms and seeking to improve the firm value. There are a range of different ways within which an activist value investor will seek to improve the firm and to create greater efficiency. The first of those is by redeploying assets. So this commonly comes in the form of selling off unprofitable divisions or departments and often streamlining the firm down to its main business interest, or only keeping the core activities that are actually generating a profit and spinning off or closing down particular sectors or departments that are not doing so well. Another approach that's often adopted is by changing the capital structure and or dividend policy. So activist value investors will often use a lot of leverage and borrow a lot of money, and thereby changing the balance sheet and using those borrowed funds to make changes to the firm. Or they might identify that the current dividend policy is such that it doesn't enable the firm to maximise its value. So maybe the firm is not reinvesting a sufficient proportion of its profit to enable future growth. So maybe that would be changed in order to come up with a structure that the activist value investor sees as being more effective for the future operations of the firm. But often the most important and effective change that is actioned by an activist value investor is through changes in management. So the most common change that we'll see when an activist value investor comes in is that they will remove many of the existing senior managers, bring in their own people, and seek to change the culture of the firm and improve the corporate governance of the firm. And those new managers will basically be the participants who enact a lot of the change and bring in a lot of the new processes and systems that are going to improve the firm, and therefore resulting in a firm that, as I mentioned earlier, is run more efficiently and effectively. The key outcome of this being the fundamental value and also the market value of the firm improving, such that the activist value investor can profit from this transaction.